So hi everyone, welcome to this webinar where we're going to talk about careers in venture capital. Now, venture capital, of course, not just in India but the world over, is considered a very interesting, fulfilling, and elite career. And obviously for the right reasons. On one hand, it helps you hone, utilize, and dig into your polymath skills, right? You need to understand how industries are shaping up. You need to understand business models really, really well. You need to be good with numbers. You need to have excellent people skills. You need to be authentic. You need to be well networked to become a good VC. And at the same time, it's been considered a very, very fulfilling profession in more ways than one. The most important being that you get to run shoulder to shoulder with founders who are trying to change the world very, very early on, in their respective journeys, and see, as they become large, world-beating companies. And at the same time, there's a little pot of gold, to be made along the way, which obviously doesn't hurt. Which means that it's a career that's worth doing justice to in front of people who are currently studying in business schools, or those who are a couple of years out of business schools and they believe that it can be an interesting career path for them. And for that, we thought we'll bring this little talk together. My name is Kashyap Chanchani. I am the founder and managing partner of the Rainmaker Group, which is among India's top 3 investment banks when it comes to helping venture-backed companies raise growth equity, which obviously means that I've had the good fortune or privilege of working with some of the best and the brightest minds in the VC world across India, as well as some of the elite founders that they've backed, who've generated value anywhere between a few $100 million to close to $1 billion. Uh, Now, venture capital in India over a period of time has really matured. 10 years back, if you saw, venture capital industry would be limited to, say, anywhere between half a dozen to 10 odd funds, which would be investing in similar companies at similar stages. But today, it comes, in, different shapes and sizes. You've got a slew of angel investors, hundreds of them, in fact, who are doing very, very well. There are classic VC funds who invest anywhere between a couple of $1 million all the way to tens of $1 million. There are family offices who are a part of this ecosystem. There are funds which specialize in different pockets of venture capital. Those that want to invest only in consumer companies, those who only want to invest in very, very high tech businesses, those who want to follow only a narrow thesis. To decode it all, we've got a fairly interesting panel here. We have Shiba DeMello. Shiba has worked with 2 VCs in the past, and currently, she manages a family offices where she invests alongside VCs and she invests into VCs. We also have Revant, who used to be an early stage VC with K-Start. He used to head K-Start, and he's moved from the dark side to the light side now. He's a early stage consumer founder, and we've got Sarvesh, who is a classic early stage VC professional and a senior one at that with Umedyar Network, which is probably the most reputed impact investor in India today. And how we'll structure our discussion today is, we'll try and address, every facet of, what a career in venture capital in India really means. We'd start with, what does it take to get into the venture capital industry? We'd, move on to see, what is a typical work day or a work week like, in the VC industry, as you move up the food chain. What does it mean when you're an analyst or an associate? What does it mean when you're a principal or a director or a VP? And what does it mean when you're a partner? We'd also talk about, what are the highs and lows, that come with working in this industry. We talk about, what are the potential exit options, if you want to be, daring and adventurous like Revant. We'd also talk about, how the VC industries in India's evolved over a period of time, and what does the near-term future of the industry look like. With this agenda and without much ado, let's move to each of our panelists with my first question. So my first question to each of the panelists, starting with Shiba, is, Shiba, how did you get into venture capital industry? Obviously, it's an industry that's very, very hard to get into. Every year the analyst class would be anywhere between, 15 to 20 odd people, and most of these positions would be taken by people who are ex-founders or ex-consultants, right? So for people who don't fall into some of these buckets, we just have say half a dozen people who've got a potential to enter this industry. So how did you get into this industry? What are the skill sets that you built along the way which really helped you get into this industry, and what's your career path been till now?
Sure. So when I joined the industry, it looked very different actually. Right? I joined in 2011, and there were very few VCs at that time. It wasn't even the concept of entrepreneurship was not as well known. So my career path may not actually be relevant to a lot of people because also I took a slightly unconventional route. But I will go through it in case someone it might help someone. So I was working at Nomura in Bombay. I was working in research there, and I wanted to move into VC mostly because I've really been fascinated by entrepreneurs and the whole process of starting up. But personally, I don't have the guts to do that myself, and so I thought and so the whole role of a VC seemed very interesting. So the way I started was, of course, doing my research, found out more about what firms are operating in India, where they are based out of, and all of that. And I just basically sent out a cold email to all of them, wherever I could find their details, giving my profile, talking about why I wanted to apply, and all of that. And as luck would have it, the firm I joined eventually, IDG Ventures, was looking for someone who could do research on the industry because the whole space was so new at that time. There wasn't much formal research done on how the Indian VC ecosystem was working, what kind of exits people were seeing, what kind of investments had happened, all of that. So that way, my skill set matched what the firm needed at that point. When I joined, I actually didn't join as part of the investments team, but once I did, I got a great opportunity to pick up those skills also, the actual skills of deal sourcing, deal evaluation, which is very different from public markets, which had been dealing with till then. And eventually, I made that transition within the firm into the investment division as well. So yeah, it's again, that's a very different way. That's not how people usually join a VC firm, but that's what worked for me.
Sure. So for you, Shiba, the primary motivation of getting into VC was, living the entrepreneurial dream, in a vicarious way.
Vicariously, yeah.
Yeah, and for your prospective employer there, they were trying to bridge, the information asymmetry gap, right, or the
Yes, yeah.
access asymmetry gap, right? I mean, which makes the venture capital industry so different, right, from all the
Yeah.
other asset managers. That's a very interesting point of view, Shiba. Thank you so much. Sarvesh, how about your journey? Because you had a very, very different journey coming into venture capital as compared to Shiba. So would love to hear about that from you.
Yeah, thanks, Kashyap. So for me, it was a lot of sort of different steps that led to it. It was not something that I had planned, right? And I'll tell you how this sort of happened. So I mean, one, I wanted to do MBA because I had spent all my life until graduation in Calcutta, and that was honestly a way for me to get out of Calcutta and probably have 2 years outside. Before I would go back and start a business, right? And that was really the outlook. MBA was really, just a sort of mid path to starting something of my own, because that was always the idea as I was sort of studying. When you get into a college, then you realize that there are a lot of different avenues which are also available, which you're not aware, right? Probably before that. And so one thing led to another. I took a job in JP Morgan from campus. I joined the investment banking research team. The idea always was, I'd work for 2 years and then, go back to Calcutta and start a business of my own or join my family business. And then 1 year into the role, I was offered a position in the principal investments team at JP Morgan, and that sounded sort of quite fascinating. We used to write large ticket checks, large fund size from that perspective. So everything was good, and so I ended up joining that team and was quite fortunate to actually have been sort of picked for that, right? And then when I started doing, I realized that was something that I was actually enjoying. I mean, in some sense, as we were just talking, it is a lot closer to entrepreneurial journey that one might think of, right? And because you end up working with entrepreneurs, you end up sort of supporting them, and so from there on moved to manage was another growth stage capital fund, and was there for some time. And really what led to sort of thinking about VC at that point in time was because we were sort of coming in at growth stage both at JP Morgan and at Banyan Tree. Companies were sort of quite established by then, and you could help them on sort of strategic issues, but really a lot of things had been figured out, and your role was more of a capital provider, rather than sort of building the venture, right? And which is why then there was an interest in VC, because for me it was important to be part of that journey right from the beginning, both from a learning perspective as well as from a contribution perspective. And that's where I started looking out for VC roles, and then ended up joining when.
Excellent. No, Sarvesh, thank you so much for summing up your journey into venture capital. Now, Revant, I know for a fact, has had a very, very interesting career. And I've known him for a very, very long time. So Revant, of course, started as a wholesale banker, moved on to become an investment banker, moved on to operating role in a high growth startup, moved on to become a VC, and now a founder. Revant, if you'd be kind enough to shed some light on, how this entire journey panned out, and what really prompted you, to get into venture capital.
Sure. So what Kashyap is kind enough not to mention is he was the reason why a couple of these things happened. So for those who don't know, Kashyap used to be at Yes Bank when I was at Yes Bank. He was the one who moved to investment banking and then thought that I could do that as well. So there was one fine day when I got a call from Kashyap to say that we want to explore investment banking. And when a senior asks you that, you generally don't say no. And I think that's how I ended up in IB. I think the decision to do early stage operating was more to learn. Like everyone said, early stage entrepreneurship is something that really excites a lot of us. People end up wanting to be part of that ecosystem in different ways. I really wanted to learn by doing operating rather than advising, which I was doing till the past 4 years. And then serendipitously again, when Kalari was looking for an ex-operator / entrepreneur to run their seed fund, Kashyap was the one who actually introduced me to the fund. And the biggest realization for me, of course, it was a very exciting role. After 5 years in operating, it's very, very hard to get into a venture capital role later in your career. Most firms recruit at an analyst associate position early. And then usually it's only folks who have been around in the firm for a long time who rise up to sort of run the fund together, right? Because it's a very clear role where apprenticeship is at the core. Every fund has their own thesis. They operate in a different way. And it's very rare that somebody gets in a little later in their career. For me, what really worked was, as I said, there was a very strong reference from a reputed investment banker like Kashyap. And there were very strong references from my board members as to my capabilities to, do some exciting things. So the broad, it's very hard to define the exact skill set you need to be a good VC. But if you are a well-referenced person in the end, that also helps a lot. So it was a little serendipitous. It was a very exciting role. Not often do you get, and in fact, the board member, even though I was a CXO in a large growth, a high growing startup, one of the board members who's been a venture capitalist for about 15 years, very well respected, told me that in the end, we would hate to see you go, but the fact is, that it's very rare to get an opportunity to enter VC at this stage in your career. So it would be unwise of me to say no, right? And it was a very objective evaluation of the situation. So it was a chance that I had to take up, and I had a great couple of years before I realized what I really, really wanted to do for the next 10 years is something which was built on my own. So that's the rough journey that I had.
Great. So, the key learning from all of this, for the young people, who are, watching us speak today is that always try very, very hard, never underestimate your ability, because, people at the other end of the table are also, dying for, great talent. So never underestimate your talent, and B, make sure that, you leverage every single resource, that you can use, to access people who matter. So in fact, Rohit, who unfortunately couldn't join us today, I mean, he has had a very, very similar story. He said that, he wanted to move from banking to investing, or in fact, some other employer. And he probably tried with, 100 or 150 prospective employers. And, he, got into venture capital more by chance, than by design. But the fact that, he really, really tried, made all the difference. Thank you so much for sharing your respective journeys, guys. Now, when it comes to giving generic advice to our audience today, as to how they can potentially get into venture capital. See, what I've kind of seen is that you can't in a classic way prepare for a career in VC. It's something that happens to you by chance. And when you built up a skill, or a trait, which is very, very important to the industry, and you've got a fairly solid generalist mindset, is when you automatically become a candidate for VC. So some of the classic paths that I have seen myself is people who've done their undergrad and have been founders for a couple of years. They are really hot candidates to become venture capitalists, because they understand what it means to run a real business. They are empathetic towards founders. They understand how to evaluate business models and industries, because they've done it for themselves. Consultants, especially if you work for a Bain, BCG, or McKinsey, are fairly natural candidates to get into venture capital. I've seen operators, like Revant, especially if you work for a credible high growth startup, they are potentially good candidates to get into VCs. Product managers, again, are I've seen, are great candidates to get into VC. And to a lesser extent, I've seen bankers or corp dev guys, again, getting into VC, especially if you're looking at later stage VC, where evaluating numbers or getting up rounds for your portfolio companies becomes all the more critical, right? So for all the young people who are watching us today, who are studying in a business school right now, who've just got into business school or a couple of years out of business school, what would be your short advice on what they can do to basically prepare the skill sets or backdrop to potentially get into with the venture capital industry, even if it may not happen by design? I'd like to start with Shiba first.
You're on mute, Shiva.
Shiva, you're on mute.
Sorry about that. Yeah. So on skill sets, right? So like Revant also mentioned, right? A lot of people usually join VCs at a earlier stage in their career, and the reason for this is also because VCs know that this is an apprenticeship kind of a role. Most of the skills you need, you can only learn on the job, working with the seniors in the organization, which is why that model is preferred a lot. But if you're on the outside and you're trying to get to this industry, one of the biggest skill sets, of course, would be a large kind of a network of people in the ecosystem. That is a very useful thing to have in this industry, and that is also something that you can take to the employer. Someone So if you have a large network by definition, you will know the VCs, or the VCs would have come across you in some case or the other. So they will already know you by your reputation. So that helps a lot before you even get to the interview, and it gives you a lot more credibility. So it's not like I mean, I just saw that question of how do you prepare for interviews and all of that. So ideally, you should have something before you even get to that interview stage, because it's a very intensive, people skills kind of a role. So that is one thing I would say. The network. Also, of course, definitely have a view on what is happening in the industry. Keep a track of it. I mean, most of this is a lot of newspapers, of course, cover all the different deals that are happening, and you should definitely do your own research on this to understand what kind of deals are happening, who are the different players in this industry, what are the different stages, and have a view on why are these things happening, because a lot of your role will involve trying to forecast the future, which is a very difficult thing to do, of course. But you need to prove that you can think through that analytically. Say that this is internet penetration is at this percentage now. This is the next wave, or this is a trend we are seeing in the market. Therefore, this thing will be big next. These are things that you should know before you get to that stage. So I would say these are the two main things. Building a network and also knowing future trends.
Great. Sarvesh, would you like to add something to what Shiva just said?
Yeah, I think you both have covered most of it. I think one, I'll just reiterate, Kashyap, what you mentioned. There is no straight path to VC. You'll see many different people with different kinds of experiences. So it's not like you do one thing and that will lead to VC. So I think that is one thing which is very important to know is no matter what you end up doing, you might never get into it, or you might not even want it intentionally, but you might sort of get into it, right? I think one thing it's sort of useful to keep at the back of your mind. To add to what Shiva mentioned, I would say in addition to knowing, I think it's important to also express that point of view. And there is a very sort of badly used term, they're called as thought leaders, right? I think VCs like to use that term a lot. I think it's important to sort of put out that point of view and make it widely known as well. And I think that's how you'll probably create more inbound requests for yourself, as opposed to converting any outbound requests that you will make to a VC.
That's a very, very interesting point, Sarvesh. That build a personal brand, right? Build a personal brand so that prospective employers, including investors, start taking an interest in you. You've got something unique to offer to them, right? In terms of how you think, how you prophesize, businesses and industries would move tomorrow. That's a very interesting point. Revant, would you like to add something to what Sarvesh has and Shiva just shared with us?
So I have a little bit of a, maybe I don't know if it's a contrarian view, but maybe it's a elucidation of what exactly Shiva mentioned, right? So this term network, this term thought leadership is a little vague. Like I see so many young folks going on LinkedIn and talking about their thought leadership, like giving an analysis and saying, what do you think, right? Or this network is how many people do you really know? So I have this bad habit of asking people as to why they take a certain decision. So once I got into VC, I actually asked the question that what made you take the decision, right? That I'm good enough to actually come into venture capital 10 years after I've done a bunch of other things. Very clear. What is the role of a venture capitalist, right? Half your role is to find great founders and convince them to take your money, right? It is contrary to what most people believe. Founders choose VCs and not the other way around. And if you have to find great founders, you need a network where founders are, and as I said, founders choose VCs, right? So you need to have a reputation within founders that you will be able to really add value to their lives, because they'll need to scale a company, build great teams. But it's your ability to find those founders and find those traits that will really help them create large companies, right? And recognizing these traits of success is a very big edge for any VC. So if your network sort of believes that you can you have that trait, or you have the network to sort of learn those skills along the way, then it's really helpful. The second piece actually that really helps for VCs to do well is their genuine empathy for entrepreneurs, right? Because it's a very hard job to be an entrepreneur. Even if you're well funded, every well funded entrepreneur will also tell you 20 different problems that they have in their lives, right? So to be really understanding of the difficulties they face and appreciate any progress that they make in their lives is very critical. Now, this obviously, and that's where, being an ex-operator, ex-entrepreneur actually really helps, because you've been through that journey. So specifically, when I asked this question, the clear response was that three very well-respected people in the industry, Kashyap, yourself, who's spent 15 years in investment banking, two of my board members who've been career VCs, 15 years plus, very well-respected, actually believed that either I had this trait, like either founders respected me, or I would gain the respect of founders because of the way I am or what my network is, right? So if I have to articulate, forget all the parts, investment banking, private equity, you have been an entrepreneur. If you can demonstrate that you have an ability for a founder to respect who you are and what value you can add to an entrepreneur's life, or sort of have that genuine empathy for entrepreneurs, and entrepreneurs believe that you are a person who's going to be kind and helpful along the way. I don't know how you showcase that, but whether it's thought leadership or your network, but those are the intrinsics that need to be seen by anyone who will want to hire you in their firm. And I believe it's very hard to do that unless you are genuinely very good at what you do. People believe that you are good, and you don't have to go on LinkedIn and say, I did. Like I see nowadays, oh, I got an admit from IIM Kozhikode, SPJ, and IIM Indore. I'm going to join IIM Kozhikode. I'm so happy. Like, why do you need to say I got 3 offers? Just say you're getting in and you're happy, right? Like, what are you trying to really show? So I think fundamentally, it's easy to lose the plot in trying to showcase thought leadership or your network. What genuinely helps is third-party references. In my life, I have never seen this. As I've risen a little bit senior in whatever position, or as I've become an entrepreneur, I've realized everything is third-party references. One of our co-alumni, and Kashyap knows this, is very soon going to enter the venture capital private equity world. And the only reason he's getting in is because of very high value references, that he's a genuinely good person. He can actually, and though he's not done investing ever in his life, right? He can be a great investor because of these traits that I just mentioned, right? So you may be for all we know, a bootstrap entrepreneur for the last 15 years, and your business may not have gone anywhere. But if people believe that you are a well-respected individual and founders would love to work with you, and you can have a genuine empathy to really understand what they go through, you will. And that's what your network says. You don't exhibit that image everywhere, right? It is something that your network says about you, that this is a person that we like to work with. And that's most of your job done.
Great. Revan, thank you so much for, that sharp and well-distilled advice. I was hoping to, get into more details in this, as we talk about, what does it take to make a great VC? But, I didn't want to interrupt your flow of thoughts. I thought, nobody could have summed it up better, that, eventually it's all about network and references, and those that are built in a genuine way, with a level of authenticity, rather than from the perspective of building a network, right? There are people who noticed your work, or there are people who owe you one, right, are coming back to help you, and so to say, send the elevator down for you, or pay it forward, as it's more commonly called in our industry. And we talk a little bit more about it, as we talk about the evolution of the industry, and we talk about what does it take to make a great VC. Thank you so much, to all the three of you, for giving this perspective. Now we move on to our next section, which is really about letting our young audience know on what does the day-to-day job really entail in a venture capital fund. And let's try and break it, into broadly, three buckets, right? I mean, if you're an associate or an analyst, what does it mean? If you're, say, mid-level professional, right, a principal or a director or a VP, what does it mean? And if you're a partner, what does it mean? In broadly loose terms. So first let's talk about what is an analyst or an associate, by and large, does in a VC firm, starting with Shiba.
Sure. So most analysts and associates work with one of the partners, one of the senior members in the team on, and mostly assist them again, for the reason which you mentioned before, that you have to pick up the skills along the way. So most of your work will be overseen by someone else. And I would say that a lot of this, if I have to split it into the different kinds of functions, firstly, there'll be a lot of deal sourcing, industry analysis kind of work, which is mostly about finding where are the new deals coming from, the more exciting deals. And it'll be a lot of grunt work. I mean, you may have heard that, for every 100 companies that are evaluated, only one was actually invested in eventually. So the analyst and associate's job is to do that, find those 100 so that the VC can invest in at least one. So there's a lot of deal sourcing work, which is mostly attending events, reading up on the news, looking for, within your network, trying to find new deals, and also evaluating the incoming deals, because VCs are bombarded with a lot of cold emails, and you're trying to sift through them as well. So that is one. Another one is, of course, deal evaluation. Once you've selected a few good deals that you want to deal and do a deep dive into, evaluate that sector, create, and again, most of this is helping the partner, of course, create a thesis on that space maybe. The next stage would be, of course, after the whole deal evaluation piece, which is things like market analysis and all of that, and also speaking to the references of the founder. That's also a big part of this, and evaluating that company's financials and all of that. That would come under the deep dive. Then you move on to, say, term sheets, negotiations, documentation, and the analyst and associate will probably have to do a lot of the grunt work there of actually going through the documents and making sure they're all in place. And the fourth piece would be, once you've done with the investment, monitoring that company, keeping speaking to the founder regularly, making sure you know what's happening, helping the founder wherever you can, which is more of a case to case, depends on what they need help with. And mostly the partners will be able to do most of that, but it's a great thing if associates and analysts can also do that, to show that they are bringing actual value here. And finally, of course, also to enable exits. So, and there again, it's more of a once you go along, and maybe more once you've got more experience in the space, that you can actually help them. So broadly speaking, I would say it's the partners are the ones who are actually taking calls on what deals get done and how they're done, and what are the next steps. And the associates will have to do everything that they can to help achieve those goals.
Great. And one of the peculiar things about this industry, especially when it comes to younger professionals, is that the errors of omission are much more hard to pardon rather than errors of commission, right? I mean, if one or two of your companies don't work out well, it's fine. But if you missed out on a company that's gone on to become a unicorn in the next 3 years, you're a dead duck, right?
Yeah, that's true. And in fact, a lot of firms, again, it's a lot of this is also firm to firm, so I'm not going to say all firms, but people do keep track of deal flow. It's a big deal, so people will want to know that, if nobody saw this deal, why wasn't it, why didn't it come to us? Or if he's passed on a really interesting deal, why?
In fact, I mean, Shiva, you would have probably seen it, in a lot of fundraising decks for investors, for VCs, one of the key highlight is what is the percentage of the ecosystem deal flow they get to see, right? So eventually making that call, but you can't miss out on a hot company. You can't be in a position where, you've not put that hot company in front of your partner. And, also this has been, I've seen, one of the very, very key factors of success, among people who've, risen very, very fast in the industry, right? That they, got their firm privileged access, into a hot deal. And, that company went on, I mean, whether it was hot or not, you typically get to know, only in retrospect. But, when in retrospect that deal became really, really hot, it also, your career took off along with that.
Yeah, that's true. And I think something that people don't realize, of course, while joining the firm is how inventive you have to be, because there's no formula for this. How do you find the next startup hot company? There is no proven way to do it, which is
Well, I hope
why.
you're lucky.
Yeah.
Well, I hope you're lucky.
So, yeah, I know that's and of course do a lot of work, try to see every company possible and all of that. But uh, the harder you look, and also how innovative you are, how much of hustle you have in reaching out to all the outliers also, and evaluating them and trying to find that little some spark somewhere, is something that there's no textbook for it, and it really depends on
So it is hard work. It's not like, sitting on Mount Sierra, sipping champagne, and hoping that
yeah.
the founders would line up to
Yeah,
come and
yeah.
take you. Great.
Yeah,
Um,
definitely not for associates, I'm sure. At least, yeah.
I think,
Sarvesh,
if I may, sorry,
sorry,
should
go
I?
ahead.
Yeah, I think, sorry for disrupting the flow of your thought, but I just thought it was a very, very interesting section. I think when I joined BCN, when I was in seed, I learned this in the first month itself. There was this very famous quote that you miss 100% of the deals that you don't see. If you see a deal and you pass on it, then it is fine. You are okay because at some point you did some evaluation to say that no, this is not the right company for us, right? And it happens a lot of times. That is forgivable. But if you miss seeing a deal, as Kashyap, you rightly mentioned, it's unpardonable because technically it seems that you could have invested, etc. You will always be okay to the fact that at that point of time the company didn't really like Flipkart was passed by I think every VC in the country, and I don't think anyone would know this here, but I'm sure Kashyap, you know this. It was an associate in Flipkart who convinced the entire partnership to make that investment.
Yeah,
That
it was Abhishek at Axel. It was Abhishek at Axel who sourced the deal for them.
Yes.
Yeah.
Yeah, who sourced the deal, and I think the partnership said that it's too early. We don't know selling books online, how big it's going to be. And it was that associate who put his neck on the line and said, if we don't do this deal, we're going to miss the best company ever. And in the end, so I would sort of disagree a little with Shiva there. I think associates play a lot of,
Yeah.
this play a significant role in either sourcing great founders
Mm.
and then sort of, if you are good at your job and if you put your neck on the line and you've done thorough analysis, and I don't know what exactly Abhishek said that day to convince everyone that Axel put that famous $700,000 for 26% of the company, and the rest is history, right? They've become the best performing fund in the country on the back of that deal. So I think associates can change the course of history.
Yeah. Oh no, I was
And
saying associates don't have an easy life. That's all I was saying. They definitely have. The VCs are all dependent on associates, not to undermine them.
I think
So
they're the
they are.
lifeline of.
Yeah.
So anybody who's even thinking of an analyst, and I hear this a lot, that oh, I joined McKinsey, but I'm a junior associate. The Harvard guy joined as an associate. I said, like, I just like to everyone out there who's looking to make a career. If you get into a great firm or you want to work for great people, everything else gets taken care of in the long run. The compounding effect of being in a different spiral of working with great people is just so immense that even if you get like I had this, I think Kashyap, you had told me once that there was a possibility of a lower designation at a very blue chip VC, and you said what VP are associate because the compounding effect of working at that firm or for those people is going to take care of everything else in life. So I think any entry point you get in, specifically the reason VCs actually hire for analysts and associates is, in my opinion, again, if you go back, it's an apprenticeship model. you can learn how to be a good VC along the way, because there are a lot of ex-consulting, ex-bankers who get in who may not have the network with the entrepreneurs, right? But that's also a skill that you learn from your peers, from your senior folks in the VC industry. And there have been a few questions, so I just want to quickly, if you see a lot of VC analysts and associates are ex-consulting. So you do graduation, you end up at a consulting firm and then end up as an analyst, or post MBA, you may be at a consulting firm and then you join as an associate. I think one of the reasons, and everybody's asking that, why do consultants get the lion's share? I think it's their ability to be a generalist in the beginning, to sort of objectively evaluate every sector or industry on its merits, and really have a very critical thought around what works, what is the business model that may work in this particular industry. And they're trained to think that way early in their lives because they are consultants. Because in the end, as an analyst and associate at a consulting firm, you do the same, right? You get a 4-week project. It's on a banking industry. You have to, in 4 weeks, figure out how banking works and give some value add to your client. Next project, you're on a power grid. You have no clue how a power grid works. Again, in 4 weeks, you have to deliver something. I think that context switching is really helpful, because that's what will happen in a VC firm as well. Every day, like as you grow senior, you'll become a specialist. So today, Sarvesh would be a specialist in fintech and edtech, right? That's how he's built his career. But in the beginning, you need to have that ability to switch context very, very fast and understand the nuances of every industry, which consulting prepares you well for.
Excellent. So, being able to switch context is very, very important. And one should, as an aspirant, one should always keep in mind that, venture capital is a business of, it's a business of apprenticeship, right? These tend to be very, very flat structures. So, don't get too phased by, what is the designation that's being offered to you. That brings me to my question to Sarvesh. Sarvesh, what do you think? Typically, a mid to senior level professional, typically a VP or a principal or a director, do in a venture capital firm?
It's a transition phase in some sense, and before I even get to that, I think one big learning for me has been that, and that's something I think JP Morgan did quite well. Where roles were sort of very clearly sort of segmented, what an analyst do, what probably lend itself more to a banking career than, let's say, a VC career. But what it helped people do was get a sense of, what do I need to do to become an associate? What do I need to do to become a VP? And in some sense, it was important that even while you were an analyst, let's say, you were demonstrating what an associate is doing, right? And so it became like a non sort of negotiable, or it wasn't a question as to why you should be promoted. And I think that framing has helped a lot, for me in my career, is what is the next role that I'm, gunning for, and I'm actually there yet, right? Even before I'm there, am I performing at that level? And at that point in time, it becomes a very different conversation, that you're sort of having with folks. Sort of coming back to your question around, let's say at the mid sort of senior role, right? What does it look like? In some sense, it's a transition role, right? So you've moved from the grunt work of an analyst associate to now, doing other things that you might have not been able to do as an analyst and associate, right? I would say at a deal sourcing level now, and the point that we've sort of been discussing is that how do you generate inbound deals, right? Because in some sense, you have a team of an analyst associate that is doing, to some extent, the outbound route, and you will sort of continue to do that. But I think your responsibility here becomes, how do you generate that inbound interest from entrepreneurs, right? How do you create that? And we were speaking about it. How do you create that personal brand in the industry, where people actually want to come and work with you, right? And I think that to me defines, the success at this particular stage. Where people are coming to you and asking for advice, for example, right? And obviously they are sort of at the end sort of pitching you, but you become the sort of source for them to raise sort of capital from, right? And I think that's very critical to establish at this stage, because as Raven mentioned, I think if you're looking to become a partner in your own fund or join another fund as a partner, I think that's what people will look for, right? Is can you get those deals? So I think that how do you establish your personal brand, which will, I think, both be a combination of what you've already done, right? And that I think makes a obviously makes a big difference, because people look at your existing investments, how well have they done, right, and how well have you worked with your founders, right? So I think that is the other thing, and we've been speaking about reference checks, right? Your founder reference checks becomes an important one, right? What do your founders speak of you? Are you actually able to add value to them? Are you available for them? When they want to sort of speak with you, are they able to share what they are really going through, right? So I think, how do you build that rapport with entrepreneurs, and how do you then get that rapport within the community? I think that's an important skill to build on the sort of pipeline development side. By the time you've become you've come to a mid-senior role, you've some sense learned how to evaluate a deal, right? Obviously you'll end up making mistakes that you will do even as a partner. But I think by that time you've sort of figured out how to do it. Your job then becomes, how do you convince your internal IC as such, right? Because at an analyst to associate level, you're not there yet in terms of pitching, right? But now in some sense you are the one who's while the partner will sponsor the deal, but at the end of the day that partner is also relying on you. And how do you convince the partner? How do you convince the IC? The responsibility now sort of comes to you. So I think the role sort of shifts from that sense, where you move from just an analysis to how do you present it, right? And there it's both a combination of what is happening today plus your own vision of where it will be, right? And that's where you need to drive both internally, and that sort of also plays a part externally, what you talk about what's going to happen in the industry and what's your thesis around it, but how well have you articulated that thought process internally also matters a lot, right? And that goes back to all that we've been saying in terms of developing a deep expertise and then sort of talking about it. So I think that is the other shift that you end up making. Portfolio management, as I spoke about, it's a lot about now starting to work with entrepreneurs. So in any deal, if there's a partner, that the partner is obviously involved. But how I mean, does the entrepreneur end up calling you instead of the partner? I think that's an important metric that you personally at least should also solve for, right? Because that will just show for the the relationship that you've developed, the trust that the founders have on you, right?
Wow. That's a very good point. I mean, are you on the founder's speed dial, or whether it's your boss, right? I mean, that's a very smell test to figure out, whether you're doing a good job as a mid to senior level professional. Very well put, Sarvesh. My next question is to Revant. Okay, what does a partner in a VC firm do, Revant? I mean, that's where the penny drops, right? So what does he do or she do? Apart from what Shiba and Sarvesh have already mentioned, because I mean, see, at the end of the day, everybody in a VC firm does the same job, right? I mean, it's just that earlier, I mean, when you're younger, when you're more junior, it's more geometry. Later on, it's more poetry. But in fact, the basic JD remains the same, right? I mean, it's the same things all over again, right? I mean, you do more of something and less of something, that's all.
Yeah. So I think as you rightly put, everyone actually does the same job. Our core thesis is obviously you're a fund manager, right? You're sort of managing somebody else's money. You have to figure out how to invest that money into high yield generating assets / founders who can actually multiply that money for you. Effectively, if you had to take a 10-year view on that, and that's the hardest thing to do, right? Because a partner needs to take a 10-year view. Because once you invest into a company, you have no clue whether it's going to work or not. Like as I said, when Axel invested in Flipkart, they were selling 2,500 books a day. That's about it. Now, nobody had the vision it could become a $20 billion company. I think their investment case, and also for people who don't know, whenever we make an investment, we write an investment case. We have an IIM Alumni fund now, and every time we decide to make an investment, between the investment committee, we make an investment case that what is the potential size of this business in 5 years, and which is why we see that when you invest money at X valuation, you may actually get some returns. And so all of these things, you need to take a 10-year view. And it's very hard to do that all the time, because fundamentally there are no small wins. Like in entrepreneurship or being in operating or in consulting, you have small wins. You get a project, it's a small win. You deliver a project, it's a small win. You get a deal, it's a small win. In VC, unfortunately, you invest and you sit tight and you brace for a bumpy ride as well, and every business goes through that. Trust me, any successful entrepreneur that you see today will tell you how many times they had either near-death experiences or they were half stressed that this is not the right model, or they've gone through 3-4 pivots. So fundamentally, the ability to be patient is something that is hard and the most needed in a venture capital firm, especially for the partner. Second
Right.
skill that
It
is
has to come from the
very
top, right? It has to come from the top. I mean, this
yeah
patience and endurance has to come from
yeah
the very, very top.
yeah. And the second aspect that is very unknown is you also have limited partners who invest in the fund. But it's a little bit of it is your money, but most of the money comes from either endowment funds, what we call limited partners. Your ability to raise capital is also what is very important for a partner. Like no firm would promote a in person internally to partner unless they also have an ability to fundraise and give conviction to a set of people. It's like Mukesh Bhai has gone and given conviction to so many funds that you can put amount of money, you will get returns, right? And he's an operator. As a VC fund partner, you are essentially a fund manager who's managing somebody else's money alongside a little bit of yours as well. Your ability to convince someone to put in 10, 20, 30 million dollars into your fund is also very critical, and that's also what at least a lot of VC fund partners spend a lot of time on that. Shiba is in a different role today, but typical venture capital funds, private equity funds, partners would spend at least 30% of their time on fundraising, or keeping relationships with current LPs, potential future LPs. It's no different than being a CEO of a company, because you're fundraising, a lot of the times. And it's a little harder here because as an entrepreneur, you just need one person to fund you. Here, you can't create a fund with one limited partner. You need, a host of folks to back you. And it's not that there is a fear of missing out that if X person back you, then Y also will. So it's actually much harder to raise a venture capital fund, which is a key thing that a partner spends time on as well.
Understood. So raising money, managing your own investors, as well as capital budgeting, in your portfolio companies, these are some critical tasks, which come to your plate as a partner, as compared to when you're just a senior investment professional. Thank you so much, Revant. And before we go on to the next question, which we'll ask Revant first, so that Shiba has an opportunity to take a contrarian view on that. I want to move to Shiba for a second, because in a current role, she wears a very, very interesting hat where as a part of a family office, she also manages a fund of fund and does co-investments alongside VCs. So my question, specifically for Shiba is, Shiba, whatever you can tell us, about how do you go about choosing investments in VC funds, and how do you go about choosing co-investment opportunities, because these are times when almost every fundraise has a co-investment opportunity, right? I mean, these are tough times, for the entrepreneurial ecosystem, especially when it comes to raising money. So, Shiba, if you could take a couple of minutes to, throw some unique perspective, which you can only bring in, towards these aspects.
Sure. So at the family office, I guess with every family office, it's really dependent on what the family wants. What are their priorities? And with us, definitely, it is entrepreneurship. Indian tech ecosystem specifically is of great interest to us. So some of these things are decided by different LPs. And the allocation to it is usually done in a more structured manner than if you have to just make like when you're evaluating a direct investment in a startup. It's very different from if you're evaluating a fund, because here you will be thinking of things like how much do we want to allocate to this asset class, and then within this asset class, what do we want it to look like? How many late stage VCs, how many early stage, how many sector focused, which sectors, and then you're trying to cover those different aspects. And then of course you're also since you have a limited allocation here, this is all high risk. So usually you only allocate like 5 to 10% of your entire corpus to this asset class, which means that you always want to have top tier funds, right? So
Mhm.
that's I guess there's a lot of competition between funds for this, because LPs would probably invest in maybe 2 or 3 max, a fund in a particular space. So you're competing with all the other funds in that space, and you're trying every little thing that can set you apart is important for you.
And especially more so
That's
because,
yeah.
with the kind of family office that you work for, I mean, it brings in, I mean, raising money from them brings in its own credibility and domino
Yeah,
effect,
yeah.
more
Yes,
than just
yeah.
money for color, right?
Yes, that's true, of course. So for us also, I mean, we also try to be selective in that sense, because we know that the name is also going with the capital. So we prefer to keep it as a small group of funds that we are comfortable working with, and not have, like, a very large portfolio. We don't want that. And yeah, I guess that is definitely one thing that we would like to do to evaluate, what kind of funds, what kind of operations do they have? Is this something? Is their approach something we're comfortable with? So that's and of course, returns and the numbers and all matter a lot, and that's what everyone is always trying to do. The challenge is for a lot of funds that they haven't yet finished their fund life cycle, right? Very few funds in India have actually seen 2, 3 fund cycles happen already. So the first few wins matter a lot to funds, because that's the only way they can showcase saying we've created so much IRR, we could find so many winners. When the bulk of your winners are still not exited, they're in your portfolio, and then it's all book value at that point.
Sure,
So that is also a few of those things that we take into account when you're looking at a fund.
sure.
And yeah,
Sorry,
yeah.
before we move to the next question, I also want to take a side and speak to Sarvesh, because Sarvesh, you work for a very unique kind of venture capital firm, right? I mean, you do impact investment, and when it comes to impact investments, ON is probably the first name when it comes to mind, when it comes to the VC world. So, if you take a minute to shed light on you know what you do, especially in terms of the kind of companies that you want to invest in, how is it different from what generic early stage VC would?
So a couple of things. I think one, so for us, it becomes a question of sector, and as well as, what kind of companies do we want to fund in that sector, right? And so even at a sector level, there is a whole sort of, strategy that goes behind in terms of what sectors are inherently impactful, and what sectors we don't see, that kind of an impact, right? And which is why I think first selection becomes on the sector. So areas like education, healthcare, financial services, agri, mobility, all those become sectors which are inherently impactful, right? And that becomes a key filter for us, which means like something like SaaS is, and we've been hearing about, let's say, Postman, for example, recently, right?
Sure.
And there are many other successful examples in SaaS, but that's not a space that we've invested in unless and until it's a fit with one of our existing sectors that we are sort of looking at, right? Be it education, be it agri, or the others. So I think some of those sectors then become out of strategy for us, and we don't end up spending time on them. So I think that becomes one filter. The other filter that we end up looking at is at a company level, what kind of an impact they're having, which means both from an outcome perspective and outcome for whom, right? So if, let's say, there is a product or a service that is catering to just the top income segment, and we don't see that scaling down segment, then that is not something that we'll ideally go ahead with, right? Either there has to be some demonstration of impact there. At times it is direct, or at times it is even indirect, where you are sort of spurring competitors, and the competitors end up coming up with more affordable options, right? But I think either of those two at least have to be there, and that's the filter that we end up applying. So for us, whenever we look at both sort of in some sense go hand in hand, where we evaluate companies which we expect will give us high financial returns, but at the end of the day will also deliver high social impact. to our, in some sense, some validation of our model is, when we map our own companies, and this was an analysis that we did last year, and 2 independent mappings of companies that were doing well on the financial return side, and the other on the impact side, and we saw a very direct correlation. So for us, in some sense, there's also validation that we see from our portfolio as well.
Sure. I see that, we've got a lot of questions, coming in. One of the questions coming in is, how would you compare compensation, working for a VC firm as compared to, say, consulting, investment banking, or, sales and marketing? Revant, you first, so that Shiba can take a contrarian view on this.
No, she can't. I have done most of these things, so I can give a better view than. I don't think it's an easy answer, but I think all of these are. See, there are tiers. If you join a McKinsey, which is a top-tier consulting firm, versus, let's say, a KPMG, which is second tier, and no offense to any of these firms, it is what it is, right? Or a third tier, etc. The compensation layers differ. Similarly, in VC, you would have layers as well. So for those who don't understand, venture capital operates in a way where there is a fund management fee that you charge for managing the money for folks, right? So it's similar to mutual fund industry, where I'm sure most of your investors, and you would be seeing there is expenses of 1% or 1.5%, 2%, whatever it is, right? So similarly, most VCs would charge a fee, and that's how they sort of generate some income so that they can pay. In the end, it's a set of people managing that money, right? So depending on the size of the venture capital fund, usually, if absolute fee may increase, and therefore their ability to pay higher is better. Even if size is not a constraint, you would see reputed brand names. You can, layer VCs in tier 1, tier 2, tier 3, and compensations will differ. But overall, if you do a tier 1 consult versus tier 1 VC, tier 2 versus tier 2, they are all similar. I don't think you would end up. In fact, I would say buy side would actually pay you a little lower in the long run, with service for a fixed compensation point of view.
Sure.
Where I think the biggest difference comes in is the carry. So if essentially how VCs also operate is they take a portion of the profits. So let's say when Flipkart, for I don't know, roughly a 20 million investment from Axel gave them a 600 million outcome, they charge what is called carry. So let's say there was a 20% of the profits get shared between the fund managers as well as the teams, right? And that's the big outlier. For example, when Lightspeed recently exited Oyo, they had invested about 23 million over 2 or 3 years, and they exited 500 million. Now, imagine there was a profit of 475 million, on which 20% technically came back to Lightspeed. Now, that's a insane amount of money. So I don't think fixed compensation is what you should be comparing to get into VC. The reason actually what Sarvesh and Shiva mentioned, that it feels a little entrepreneur-like, is because I think the end outcomes, if you really get good end outcomes, your outcomes are almost commensurately similar to what an entrepreneur would sort of make in that sense, right? There is a huge amount of money if you can wait, be patient for 10 years, and you can partner with the right entrepreneurs, be part of their journey, and make money with them, rather than fixed compensation per se. So largely, I would actually say that's the big similarity between entrepreneurship and VC. Everything is back-ended. If you make it, all of us will make money in the end. If not, then it is what it is.
Sure. So the short message is that these are not apples to apples comparison. Quality makes a difference. The size of your fund makes all the difference. And C, you have to be very, very patient, because your returns tend to be back ended, right, when you reach the towards the end of the fund life. Thank you so much, Shiba. Do you have a contrary opinion to offer here, or do you agree with Revant here?
The idea was just to say that I'm taking a contrary.
So she has a contrary view because
compensate as we go along. And Sarvesh, don't
gives money.
You also get to offer a contrary opinion.
She gives money to VCs and asks them that, why are you charging so much fees? Don't charge me so much fees.
Yeah. No, but that's true, of course, that a lot of it comes in the form of carry. It's not really your direct compensation. But yeah, this whole thing about patience, I think, is a little under appreciated, and because also that's a few questions that have come in, which we can address more in detail later, but about the whole exit piece. You don't get carry if you exit too soon. That's something you have to know when you're joining, right? So that's when, of course, most firms do give competitive compensation, so you can still join and leave and still be comfortable. That's not a problem. But
Competitive.
the upside comes only if you're willing to stick with the firm for 10 years. And if you're sticking for 10 years, you may as well stick for 20 years. That's the kind of situation it is there. So I think that's something you have to keep in mind.
Great. Given that we're getting questions around, exit options, I thought we'd, nail this question first, before we move on to, some of the other questions, that we have. Sarvesh, start with you here. What do you think are potential exit options, after if you're currently, in the venture capital profession?
You're asking him where he's interviewing Kashyap.
I'm sorry?
You're asking him where he's interviewing right now. That's a tough question.
Or what am I thinking? Yeah. I think first of all, people, and this is, I would sort of break the, the myth, right? Like, VC looks very attractive from outside, right? But when you think of it, it's a very small industry, right? There are a handful of firms, and let's say once you've reached also a particular kind of firm, a particular kind of size, your options from there on are sort of also quite limited, right? So I think from that perspective, so one, there are options within the industry, and then there are options outside of the industry, right? When you think of options within the industry, there are twofold. One, you can, join a bigger, better fund, and that really depends on the quantum of, the funds that you can apply, and depends upon which firm that you're working on, right? If you're already working with a sizable fund, then, any which ways the number of options that you will have to go with a higher size fund might be limited, right? The other option is, as you become tenured, then you even start a fund of your own, right? And as we've heard about it, raising capital, and that's my belief, is probably one of the hardest things that you do as an investor, right? And it could be PVC, but really fundraising is really challenging, right? When you want to set up a fund, but that's also one option. The other is, like, for example, Revant has done, and we see a lot of that happening right now in the industry, is people actually moving out and into operating roles where they start their own venture, right? And the advantage that comes with it is, one, you're well networked in the industry. The other is because you spend time looking at some of the spaces, so in some sense you have a very deep thought process. You know the sector quite well, right? And that sort of advantage for you, as you look to sort of start something of your own. And I would say the other option, if you want to move out of the industry, is you could join a large organization in a specialist role, right? Where, let's say, you've had experience prior to joining VC, either in, let's say, a finance, operation, marketing, then you can join in one of those roles in a larger company as such. So I would say those are some of the exit options that you have.
Sure. So
But I would sort of say that it's actually in some sense, when operating roles. So let's say if you're working in a marketing function for an organization, you probably have a lot more exit options than what you actually have once you're a VC.
Sure. So given that, we are a small and relatively incestuous industry, I mean, exit options are, few and far between. You can probably move to, some of the newer funds which are coming into India, or, public market funds or tech growth funds, right? Who want to invest a part of their capital, right, in startups. That can be one exit option. The other exit option is that, you move to a corp dev kind of a role within companies. And the third, which Revant is going to talk about now, is, the entrepreneurial route, which so many of venture capitalists have taken. Revant, if you'd like to share, why you decided to make that leap, and why do so many of your peers do so as well?
So I think the critical point is what Shiba mentioned, and I don't think it's a 10 or 20. If you stay in VC for 4 or 5 years, then might as well stay for 10 or 15, because and this is for everybody, what Sarvesh is kindly not mentioning, or Shiva has not mentioned, is After 4 or 5 years, you start seeing that what your potentially profit pool would look like, and then you want to stick around and make sure you get that money, right? So I think there are very clear answers. If you either take a call early in your life that you want to be in this for the next 10 years or not. And I think I'd mentioned this before as well, but maybe it's repeated. But being a VC is more like being a coach, right? You are on the sidelines. You are sort of helping the players play on the pitch, right? Which is the entrepreneurs and the management team. And some people are great coaches, may or may not have been great players. And there are great players who turn out to be terrible coaches as well, right? But that's from a skill set point of view. I think the difference is, unlike any sport, your retirement age as a player is not defined for entrepreneurship, right? Because the physical, mental stress is pretty high, but physically you may actually go in for longer. So for me, it was to decide whether I want to be a player or a coach. At right now, I was 35. I thought I could be a coach later as well, but I really wanted to be a player for a while longer. And that's why I took a call to move out early, because if I had given it 2 more years, then it's very hard to leave, and not just from the monetary perspective, because you see potential profit pools coming in. It's also that you start, once you're getting good at being a coach, then it's difficult to go back being a player as well. So I think that's a very key analogy that I use for most people, and most people decide to become an entrepreneur after being a VC, and usually it's early. Very few people come out as late as me. My co-founder also actually is ex-VC. He was with Fidelity for about 6 years. He had the typical path, McKinsey and then VC, and it's very hard to do both per se. So most people I see coming out of VC do it early to become an entrepreneur per se. Usually analyst, associate, even maybe a AVP, a VP sort of thing. And very few people at partner track or who are partners would then end up being an entrepreneur, because they've been doing it.
I've seen only a couple. I've seen only a couple,
Yeah.
over the last 10 odd years or so, who are partners in VC firms and have gone on to become entrepreneurs. But I love how you put it, Revant. I didn't want to be a coach. I wanted to be a player. And, I'd beg to differ with you when it comes to, your opinion that, 35 is, way too late to become an entrepreneur. It makes me feel old. I started out at 35. And, I'd like to believe that, I'm not too old as yet. Shiva, it's time for you to contradict Revant on this one now.
Yeah, no, so definitely, it's there are very limited options. That's true. And another thing is also that since the firms are so small, there isn't much opportunity to move within a firm. Also, if you're comparing to other industries, because quite often, if you're working for a large firm, you can also move between roles and learn different things and all of that, which is not an option in VC. So that's also one thing to keep in mind. And of course, the only track is the partner track, basically within a VC firm. I'm talking about options within the firm. But yeah, moving out. I of course moved to this family or to the family office, where I'm doing a very similar role again. So it was a good thing for me to take over the same skills. That's that was the most logical path for me. But out of this, yeah, I would say that is I don't really have much, I guess, much to differ with from what they've already said, that the different paths that are out there.
Understood.
Let me myself give the most contradictory opinion. Very few. It means I don't know why this question comes up. Why would you leave VC?
Are you contradicting yourself?
No, I'm not saying the question. I'm contradicting the bloody question. There are like 200 people in a 1.3 billion country. 200 लोग VC में हैं. कोई छोड़ेगा क्यों? मतलब इतना मुश्किल से तो घुसते हो तुम. मत छोड़ो यार. अगर घुस जाओ तो वहीं बैठे रहो. मत छोड़ना.
Yeah, he just felt like he wants to contradict someone.
It's time for Revant to buy us a drink now. Now, another insight, that I had to share, with all the, young ladies and gentlemen who are watching us, is that, if you want to be associated with a startup ecosystem as an investor, most people believe that, being a venture capitalist is the only way. But given the fact that, our ecosystem has grown so much over the last few years, so to say, contradictory or counterintuitive as it may sound, I think the options outside venture capital, are a lot many more, when it comes to becoming an investor in the startup ecosystem, right? I mean, starting with becoming an angel investor, right? That's a flag that Revant and his team is holding high. When it comes to our community's angel investment fund. So many of us are angel investors in our own capacity. You can get into organized angel groups like India Angel Network or Bombay Angels, right? Managing the network, and I've seen a lot of people moving to VC or growth stage investments in tech startups. From those kind of roles, I've seen so many people get into venture debt funds, right? Which is again, a fairly large pool in India right now, and growing with every passing month and year. I've seen so many people, working in family offices and now becoming a more and more important part of the venture capital ecosystem over a period of time. More and more private equity funds, right? I mean, more including the global ones as well as local ones. They want to invest in growth stage startups now, right? So let's say if you're working for a private equity fund until now, looking at IT services or BPO companies, or large consumer companies, the pool of fast growing or reasonably mature consumer or consumer tech startups again come under your radar. So it would be in my opinion, it would be wrong to say that being a venture capitalist is the only way you can invest money in startups. So that was an aside. One quick question that I have to ask all of you is, what do you think are the high points and low points of being a venture capitalist in 2 lines? Let's first go to Revant and then to Shiba, so that Sarvesh has an opportunity to give a contribute this time up.
Tough question, Kashyap. So I'll talk about the low point first. The low point, at least for me, having been an operator before, is not to have the ability to help when things don't really go well. See, in the end, you're managing someone else's money, so you have to take objective decisions. It's
Sure.
not that if a company is not, like, look at the current COVID situation, right? It's just hard for funds to put more money in a company just because revenues are not there, etc., etc. So it's hard to see that, and I think it's very difficult for an entrepreneur to also relate to the fact that in the end the fund manager is managing money objectively, right? It's not an emotional decision all the time, and so the hardest thing for me is to see when you are not able to help an entrepreneur in their dire need sometimes, right? Money is running out. There's nothing else that you can do. It happens a lot. I think the biggest thing that people have not seen is how many startups fail. The mortality rate after seed is 80% in India. Seed investment.
Sure.
So you must have raised $1 million. Seed
The
is
short message here is, Revant, that when you have to make a choice between your fiduciary duties and empathy with the founder, I mean, it puts you in a tough spot, and it's never easy.
Yeah,
Great.
I think that's
the high points.
I don't know. I think a lot of highs that, at least for me, again, because I worked at Seed, I worked with a lot of young founders in very young stage companies, where every month something new happened, and it also, you sort of ride the entrepreneurial wave or ride the entire startup journey through their eyes. And
Sure.
I think for the honest high for me was when we problem solve together, right? Whatever the problem, when an entrepreneur calls you and says, "This is a problem I'm facing, let's solve this together," or "What's your thought on how do I sort of go about this?" For me, each of those conversations is actually a high.
Sure. Sarvesh? Sorry, rather Shiva.
On the highs and lows, right? So low point, actually, I would say, in fact, is a little even earlier than what Raven said. It's like I mentioned, you see 100 and you invest in one. So quite often for me, it's like that you're telling 99 people no, which itself can be kind of I think it kind of also affects people after a while. When you look at VCs, they generally enter conversations on a slightly pessimistic note. And usually the attitude is, convince me I'm wrong, kind of a thing. And that's because of this, because that, there's a 99% probability that this idea will not fly. So I think that is kind of a slight low point, and would also explain why VCs are a little more cynical in general. High point definitely.
So Revant had a stampede
Sorry?
outside his house, when he was looking to raise his first check.
Yeah, not of course. Yeah, not if you're Ravens, but yeah. But then there are 99 non-Ravens out there. So, so then the thing, high points are definitely, I think, when you come across some really, really interesting idea, really, really enthusiastic founders who want to build, to change the world. Uh, that is an enthusiasm that is very hard to find anywhere else. I think that kind of, to meet people like that on a day-to-day kind of thing, and to help make that vision possible. I think that feeling is something else entirely.
Great. Sarvesh, these both of them are wrong. Tell us why.
Actually, not really. So I would do a +1 on what Raven said. I think one of the sort of the bigger lows is when you find a company and let's say they are unable to fundraise, for example, and that's the nature of the beast that we enter in, where you enter in early and then the company has to raise follow-on capital, right? And it could be for a variety of reasons. One, company specific, could be market specific. I think if you see situations where your companies are running out of cash, I think it probably are the worst moments during the day, right, when you think of it, and what are your sort of options, right. I think the other low really is in the journey itself. There are times when you're working with founders when there are and because it's probably you end up taking an objective view, you're outside of it in some sense. There are things where you would want a particular thing to happen, and that's how it should be probably working, but that's not how the entrepreneur thinks, right? Now there are cases where it works out well and you're probably wrong, but there are times where it doesn't work out that way, right? And probably what you had imagined was actually how it should have played out. And there have been cases where it has played out where you've given a certain advice and people have after 1 year said that okay, what you said made sense and we're doing that now. I think as an investor, that's a big frustration, because in some sense you're one level removed from the company, and there is only so much you can guide and you can nudge, but ultimately it's the founder who has to take that call. And when you see they're not going in the right direction, I think that's a very frustrating point, right? Because you see it's not going to work out. So I think those are the lows. I think from a high point of view, there are two, and which are in some sense the extreme ends. The one extreme is when the company has done well and you see an exit. And I think that's ultimately what you're on it for, right? The end outcome. But the other is really at the very beginning, right? So in some sense, we enter companies at a stage with set a business plan or very very early stage, right? And as Revan was saying, you end up working with the company, and when you actually launch the product and you start seeing customers coming and talking nice things about it, actually paying, renewing, I think that feeling of seeing that company moving from an idea stage to actually generating revenues.
When
I think
people in a social circle start talking about your investee company and you say, "Oh man, I made the right choice."
Yeah. So then there's validation of what you were wanting to do, right? Your whole hypothesis. So I think that definitely the bigger.
Great.
I'll let Sarvesh bask in that understanding that he's chosen the right company. As I said, it's the other way around. Entrepreneurs choose VCs.
So I got chosen. That is the high point.
Revant, you're not supposed to have the last word on this.
Revant, you still have to deliver on revenue, huh?
So, before we move on to our closing remarks, given that we're running short of time, it's time we take a few more audience questions. One of the questions that has come our way is that, if you're in a business school, how can you, prep towards a, career in VC? My short advice would be, try and, develop, polymath skills, try and sort of say, get to know as many as people as possible, in an authentic way. I won't want to use the word networking here, right? Being sensitive to, what, Revant has suggested, right? I mean, if you're able to show and demonstrate that you're able to build authentic relationships, especially with people who matter, that counts for a lot. And apart from that, polymath skills of, being able being able to be good at judging businesses, how they'll pan out over years, being able to understand business models, and having that genuine curiosity makes a big difference. Especially if you're not working for a great brand. Before you make a transition to VC, as one of the other questions were. Some of the other questions, that have come our way include, how can, someone gain credibility with founders? This is from Shweta. As analyst associate, given that, they've got lower experience in the industry, especially for people who haven't worked with big brands. So, see, the answer here, at least from my end, would be that, many of the founders that you end up working with are a similar vintage as you, right? And whether you're able to present their case credibly, within their system, whether you're able to give them transparent feedback as a deal is moving within your system, makes a lot of difference. So here, whether you work for a large VC brand or not doesn't make a difference. Your authenticity, your credibility with the founders rests on what you're able to deliver for them. If it's not growing, if a deal is not going through within your system, if you're able to let them know well in advance that, listen guys, this is not going to happen and why, right? That counts for a lot more than having them believe that they may get money and they don't, right? So authenticity and genuine relationships count for a lot more in this business than it's been given credit for. And that's a sentiment that that's also come out repeatedly in the conversations that we've had.
Actually, Kashyap, there's just wanted to add one line there on how you can add value, saying on to founders. And one advantage that VCs have is that you have a macro view, whereas a founder knows his or her business really well and is laser focused on that. The VC can give them a view of what's happening in the market, because that's what the VCs look at. And I think that is very important actually for founders to know, because quite often they end up going too far down the road and they don't realize that someone else has done this and this didn't work out. And I think that's where an associate or an analyst can be that sounding board and that person who can give that insight. And from what I've seen, founders do appreciate that.
And more than that,
kind
it
of
can be very tactical as well, right? It can be very tactical as well, right? Giving them what's happening in the competitive landscape, right? I mean, sharing learning from their portfolio companies, right? I mean, it may not be, say an advice coming, from a wise sage perspective, right? It can be something very, very
definitely, these kinds of ad channels are working, and this is that kind of this is a new trend that we're seeing. But of course, you have to be very careful to not give out any secrets or not disclose critical information on particular companies, because you come across a lot of that. But you can give a lot of very valuable practical advice to founders also, which they may have missed.
Great.
I think one thing also which I've seen working is if you can pick up one skill that you're good at. Might be because of your own skill sets or something that you worked in the past in terms of the industry. I think that founders appreciate a lot, right? So for example, for people who are well networked, if you can help companies in hiring, they really appreciate it. If let's say you've come from a PE background or come from an IB background, you've probably gone very deep into numbers, and that's not something typically you will see happening in a VC context. But if you can actually go out and demonstrate that with the founder that you're working with, then they appreciate that. So I think if you can identify that one skill which you can say that you are really good at, and then demonstrate it across companies, I think that also helps a lot, because then people know that for this they have to actually come to you.
Great. Thank you so much, to the audience for asking all these questions. And, now we'd like to move to our closing remarks, which is that, how do we see this industry, going forward, say, within the next, 2 to 5 odd years? My sense would be that, what's important, I mean, obviously, given that, we're not a particularly rich country, right? We don't have too much discretionary income. But given that, I think, our venture capital industry, in that sense has overachieved, right? I mean, if the stat that I read is right, last year, the investment that flew into startups was higher than what flew into publicly listed companies in India, which says a lot. And today we have, pools of capital that are a lot, deeper and varied, than the Indian ecosystem has ever had. Obviously, we've got a lot more to do before, we become a, China or a US. But, as compared to, say, in Indonesia, or Europe, I think we are right there when it comes to our entrepreneurial ecosystem or the venture capital ecosystem. I think the two big challenges that we need to nail is that can we show a slew of big bang exits, right? Can we have say a dozen or more listed companies in India at a few $1 billion, right? I mean, which is like so to say the height of achievement of the industry, so to say. And the other is that can we build out companies or support companies that have a potential to go global, in the right earnest, like companies from probably US have done, or even Israel have done, for that matter. So would love to hear from you as to what do you believe is the future of the venture capital industry in India, and what are the potential challenges that it may face in 2 lines each.
Okay, sure. Should I start? Okay.
Of course.
So yeah, definitely this what you were talking about going international, right? And we're seeing this already quite a lot of several Indian founded VC firms are actually now looking at other regions. They're investing in the Southeast Asia, they're investing in Europe and all of that. And I think that's very interesting to see, because the startups that we've been investing have already been international. I mean, they start in India, but they sell around the world. So I think that's a very, very interesting trend that will definitely continue. And I think that's something to look forward to.
Sure.
And the other thing is also entrepreneur confidence. When I joined the industry, it wasn't fashionable to be an entrepreneur. People were still talking about how the entrepreneurs face so much opposition from their families, saying get a real job, kind of a thing. And that has changed so dramatically, and we have the initial few entrepreneurs to thank for that. And every day entrepreneurs are setting a higher bar. So I think going forward we will see more and more audacious ventures happen, starting from India. And
Sure, that's a very critical point, Shiva. That in the last 10 years, if nothing else, the venture capital and entrepreneurial ecosystem, one culture that they've really built up is the culture of paying it forward, right?
Yeah.
Over the last 10 years, we've had founders who've seen exits, or senior professionals who've made money through ESOPs or VCs, right? I mean, the spirit of paying it forward is so to say a lot more evident in our industry than so many other industries, right? And it's something that's so innate, right, to this industry the world over, right? And we are sort of say seeing the green shoots of that in the Indian industry. That's a fantastic point, Shiva. Sarvesh, closing comments from you.
I think the one big change when you think of it, what has happened over the last few years is a lot more capital, at least on the early stage, right? And the reason why that has happened is because there's been some examples of success stories coming out, right? I think where there is still a dearth is on the growth capital side, and I think that will happen when we actually see companies delivering on the promise that they are stating when they are sort of starting out, right? And I think that's one thing I would love to see changing, is how do we deliver on that promise, which will for a growth stage capital, it means that there is an inherent business model which is profitable, which is scalable, right? And how do we demonstrate that in our companies? I think that's I take it as a challenge, for my companies to sort of do it, right? Where it, in some sense, you can there is inbound interest from growth capital investors, right? And I think that will happen. I think one, where you are differentiated, right? And secondly, you are executing well. And I think those are very commonly used terms. But when I think of it, I don't think so. A lot of times we appreciate how what that actually means, right? And how that is really tough, right? One is to standing out from the crowd of companies that are already there, and how do you execute well? And I think those are two things that differentiates a good company versus the others. And at least from my vantage point, I think that's something that I aim for over the coming years, or what I would want to do, or would want my companies to do.
Great. Closing remarks from the man who always has the last remark.
So I really like the fact that you mentioned about paying it forward, right, Kashyap? If I look at my own career over the last 12 years, a lot of it is because, like, why is paying it forward? It really struck home when you said that this industry operates a lot on paying it forward, right? And inherently, why is that so? Why is it that it's not common between some other industries? It's because the singular reason for success is a lot of people that surround you, right? You talk to any founder and they'll tell you that there were not one or two investors, but five mentors, 10 of their 10 of his or her first hires, and their entire management team that really contributed to the success of the company. Like, the joy I see from my ex supervisors, and Kashyap, you're one of them, uh, when I started out, that what help do you need? Like, the first question is, what do you need, right? And I fundamentally realized that it's a very differently enabled ecosystem, because success uh, requires a lot of contribution from a huge number of folks. And once you've achieved some success, you realize that it was because of not just your own ability uh, and execution prowess. And again, it may seem a little contrary to what Sarvesh mentioned, because there goes a lot of serendipitous things will happen for you to succeed in life, especially in this industry, right? Whether it is a connection. I remember our Series B in my previous operating role was because the partner at a venture debt fund introduced us and convinced, sort of gave some reassurance that these are great people to work with. And honestly, I'll go back to my first point. This industry operates on one singular premise. You have to find the best founders, and you need to enjoy your relationship over the next 10 years, because it takes 10, 15 years to really see success. So you work with people who you can really enjoy working, and therefore the references come in, therefore the success sort of comes in, and it's a shared success. And once you see that, you realize that if you want others to succeed, you need to invest time and effort, be kind, and sort of that's where the paid forward aspect comes in a lot. So the single reason why the startup ecosystem is growing, the VC ecosystem is now growing, is yes, capital is available, but capital is available because the ecosystem is maturing, right? Because there are 1,000 people who were CXOs in a lot of startups that have succeeded, who are now paying it forward, either being entrepreneurs, or essentially investing in other angel investing, helping them along, or just mentoring, right? I would spend at least, and I'm sure this happens a lot with you, Kashyap, Shiba, Sarvesh as well. Entrepreneurs would just reach out asking for help, right? And you need to give time to them, because that's how, one half an hour conversation here or there may really help them somewhere in life, and they may succeed, and you'll feel good about it, right? Because that's happened to you as well. And I think that's one singular reason why I think this ecosystem will only grow. It will grow in a more positive footing than a more negative one, because the fundamental premise for the growth of this industry is in paying it forward and being kind, and sort of building and growing that network. You may call it incestuous, you may call it paying it forward, but there is something that really binds all of us together, which is shared success.
Great. Revan, thank you so much, for those closing remarks. As we end, today's discussion, I'd really like to thank the three of you. I mean, the bright young professionals, who've shared their time and learnings with us. Thank you so much, Revan. Thank you so much, Shiva and Sarvesh. For sharing your learnings, with all of us. Uh, Take care. Goodbye. God bless.
Thanks.
Bye.
Bye.